Thank you very much all for joining today. I'm Corey Baisley, Head of OTC Financial Sales, and in the room with me are Krishan Singh, who is Head of Credit Execution, Ben Fufa from OTC Sales, and Kim Wolf, who is responsible for business and product development at Eris. We're excited to present the Eris Credit Futures Contract, which combines ICE's expertise in both OTC credit and futures, leveraging the experience and intellectual property of our partners in Eris. With our partners, ICE is able to launch a credit futures, which is designed to replicate the characteristics and economics of OTC credit swaps. Licensing the use of the market indices, the futures contracts will be traded on the four most liquid swaps, marked IG, High Yield, iTrust Main, and Crossover. Our licensing agreement with Eris allows for the use of their patent-pending methodology for the creation and delivery of products within ICE's infrastructure. With mind, here on the screen are the highlights of the Eris Credit Futures. They are simple, cash-settled futures, providing market participants a way to gain exposure to credit while replicating the characteristics and economics of the underlying swap. They will be listed on the ICE Futures U.S. exchange and clear at ICE Clear U.S., allowing you to leverage your existing futures infrastructure you have in place today. As a futures contract, it will be margined using the current band methodology and will benefit from offsets against other contracts cleared at ICE Clear U.S. where correlations exist, such as the Russell or the MSCI equity indexes. On April 27th, ICE will launch two contracts, IG and High Yield, and will follow with iTrust Main and Crossover. Into market participant feedback, I set out to create a product with a number of objectives in mind. It must be simple and efficient to express views on credit. It must replicate the economics of the underlying swap. It's to attract new market participants to the market, and it should support the growth of the swap market. With the product construct, leveraging the Eris methodology, we have achieved these objectives and more. The future will attract new market participants who are currently unable to trade the underlying swap due to mandate restrictions, legal and operational constraints. We'll open up new strategies for current CDS players as well as traditional future market participants. Expect margins to be significantly lower, reflecting the shorter holding period compared to the swap. And as mentioned, you can use your current futures infrastructure and leverage relationships already in place in the ICE distribution network of 30-plus independent software vendors and clearing members. And you will be operating in a well-known structured regulatory environment. Now we've reviewed the why, let's dig into the specifications. Below we've provided you with the highlights, while detailed specs can be found on our website for all four contracts. The size is 100,000, and that's USD or Euro, depending on the denomination of the contract. So, for example, IG and High Yield are denominated in USD. The TIPS, which is the minimum price fluctuation, is 0.01, equivalent to $10. Block size is 2 contracts, meaning that a trade of 200,000 or higher can be executed according to the block rules of the exchange. The threshold allows market participants flexibility in how they wish to access liquidity in the market. The quotation will be in index points, the same as it is today for OTC high-yield indices or bonds. For those who are familiar with the OTC market, you will notice this is not a typical quotation for IG, iTrust Main, or Crossover, which do trade in basis points. Conversion, though, of spread to index points or price can be done using industry standard calculators, including those provided by Market or Bloomberg CDSW. As stated on the screen, if you are buying the futures, you are in fact selling protection or going long credit risk. If you're a seller in the future, you short credit risk and buying protection. If credit spreads tighten, the value of your future will increase. As they widen, the value of the future will decrease. The next 3 points are a few examples showcasing how the Eris credit futures replicates the characteristics of the underlying swap. The first trading day, the maturity dates, and coupon payments match. And in the next few slides, we will outline how the Eris methodology, along with the replication of the OTC characteristics, also replicates the economics of the swap. Fundamentally, this methodology is able to replicate the economics of a swap by capturing the gross cash flows of the underlying swap and consolidating them into a single cash flow in the form of variation margin. In this way, it's like any other futures contract that has a single cash flow. But take a step back, though, for a moment and review what those cash flows are from the first day of trading the swap through maturity. So you would have your daily change in credit spreads, which are always reflected in price. You have accrued interest, quarterly coupon payments, and spread event payments, and final price alignment interest, or it's on mark-to-market. It's these factors that determine the profit and loss on the swap and therefore need to be replicated. Because it has done so, all current OTC swap curves and models can be leveraged to value the credit futures. To illustrate the Eris methodology, we've shown a real-life example of a Host Series 22 trade that incorporates the swap cash flows. And you should become very familiar with this equation of the A plus B minus C equals futures price. So the A is the clean price that is quoted on the ICE Futures US exchange by trading counterparties. You will always trade the clean price only, and is the only one element that changes throughout the day. Interest from the most recent coupon is then added, and the number is then adjusted for the index factor. C is the accumulation of all your historical cash flows to date, such as any previous full coupon payments or event payments. And D is the price alignment interest that accrues overnight using the Fed fund rate. Essentially, the Eris methodology synthetically replicates the interest you get on the cleared and uncleared swaps. Those B and C values, as we mentioned, set daily by ICE Futures US and will be published on our website in advance of market open. This is quite a bit for one slide, so ICE has prepared for a detailed document that demonstrates how the level of cash flow equivalence between the Eris credit futures contract and the cleared and uncleared swap are replicated, and we've provided that white paper on our website. Item within the equation that we'd like to note is the credit event payment, which is a component of the B value. This shown is a timeline of an actual credit event that did occur. And futures will follow the market standard of the is-the credit event determination and the settlement prices, with one mechanical exception. Payment settlement of the futures will be T+1 from the auction, whereas the typical payment time frame for a swap is T+3 or T+5. But we will discount using the OSI curve to achieve equivalence. Also in line with the OTC conventions is the mechanism. The futures contracts will roll at the same time as the swap. Every month in March and September. First trading day is the same as the swap. So for example, the market is currently trading Series 24 for IG and high yield. On April 27th, we will launch 2 Series 24 futures. In September, these futures will roll the swaps to the new on-the-run Series 25. There is no fixed roll period, but we expect the vast majority will roll into the new contract. The estimated initial margins will be significantly lower than the OTC swaps. As mentioned, the margin is calculated using the current SAN methodology at ICE Clear US with a one-day time horizon. For example, here, the initial margin for an IG Series 24 swap is approximately 60 basis points, whereas you will see here for the IG futures, it is 30 basis points. And margin offsets are available where appropriate against the equity indices such as the Russell and the MSCI. When we think of the design of this contract, it was critical for us to not only work with Eris to replicate the economics of the aligned swap, but we needed it to be easily accessible to non-traditional and traditional credit participants. With the listing of the futures on the ICE Futures Exchange, your current ICE execution infrastructure supports the contract. So starting on the left of the screen, you will see that there are multiple connectivity points for on-screen trading, such as web. You have 30-plus independent software vendors, such as Credit's real-time and trading technologies, and clearing member firms themselves also have their own proprietary trading portals. On the right, you can see you utilize block trades. They're supported by block liquidity providers utilizing ICE Block as they do today. Contact names for those block liquidity providers will be listed on our website prior to launch. So, short slide, but it's a very important slide. How do you start trading these contracts? I think first you need to contact your vendors, liquidity providers, and clearing members to express your interest in trading. We have been actively engaged with all, and we have support on day one from select partners. But it is very important, and it cannot be denied, the impact that an interested client can have with reaching out to these vendors, clearing members, and such. So you need to ensure that you will have market access to trade the Eris credit futures. As we mentioned, we have multiple connectivity points with the ISVs. You can web ICE or clearing member platforms, or you can engage with your relationships if you are over the block threshold for block trading. And then finally, you should contact us for support. We can provide you with the key contacts for all of those parties. We'll walk through the onboarding process if you're not familiar. We can answer any outstanding questions that you have. So contact information. So give us a call, but we do also encourage you to go to the website where, as I've mentioned, we have detailed product specs. We will have white papers for you, and we will include the B and C values of the launch of trading this contract. So that ends the formal presentation.